Hi, welcome to the home buying process in 7 simple steps. This video is brought to you by Money Management International, a full-service nonprofit credit counseling organization. Here at MMI, we're on a mission to improve lives through financial education. Buying a home can be exciting, and it's easy to get caught up in all the excitement and forget about how this decision can impact your financial future. The video will walk you through the home buying process and what to expect in 7 easy steps. Step 1. Getting ready for homeownership. Purchasing a home is not something that you should jump into without preparation. You'll want to start by thinking about why you want to buy and if now is the right time. Do you have money saved for a down payment? Have you weighed the pros and cons of purchasing? Do you have a budget? It's important to be honest with yourself about what you can afford. After some consideration, you may find that right now is not the right time to buy. If this is the case, that is okay. Now might be the perfect time to identify what you need to do to get ready to become a homeowner. Step 2. Affordability, loan type, and down payment assistance. Homeownership typically means less mobility and more financial responsibility than when you are renting. Evaluating your financial situation and monthly budget can help you determine how much house you can comfortably afford with room to achieve your financial goals. If you need help with budgeting, reach out to a credit counselor who can walk you through the process. When you sign at closing, you're taking on a 15 to 30-year payment obligation. So it is important to make sure you pick out the best loan and payment for your needs. Although your lender will qualify you for a loan amount and monthly payment, it may be a larger amount than what is affordable for you, your family, and your lifestyle. Generally, your monthly mortgage payment should not be more than 28% of your gross monthly income. Lenders will also want to see your DTI, or debt-to-income ratio, be at or below 36% of your gross monthly income. When applying for a mortgage, you will need to consider what loan product will be best for you. FHA loans have low down payment and flexible credit guidelines. Conventional loans typically have higher credit requirements and faster underwriting. USDA loans allow for low income, little to no money down, and up to a 33-year loan term with some programs. If you are eligible to use a VA loan, you could benefit from no down payment, low rates, limited closing costs, and no private mortgage insurance. Step 3. Applying and shopping for a loan. Regardless of the mortgage type you apply for, you will be asked for a lot of documentation such as bank statements, proof of assets, pay stub, W-2s, tax returns, identification, social security card, or other U.S. residency documentation. It's also likely that you will need to continue to provide documents to your lender throughout the process, like each new pay stub and bank statement. The lender will first pre-qualify you. This is a tentative assessment of how much they will lend you. Once the lender can verify all your information, you'll move on to pre-approval. During the process of purchasing a home, it's important for you not to take on any new debt, because this can affect your debt-to-income ratio, possibly putting qualification at risk. Try to avoid moving money around, changing jobs, or starting your own business, as most lenders will want to see 2 years' worth of tax returns for self-employment to consider the income. In addition to having income to support the loan, your credit score will also play a huge role in qualification, what loan products you will be eligible for, and what kind of interest rate you will get. For example, FHA loans require a minimum score of 580 for a 3.5% down, and while you may still qualify if your score is below that, between 500 to 570 for example, they may require 10% down. You may also want to consider down payment assistance programs even if you have money saved for a down payment. In most states, the local housing or community development authority should be able to tell you about available DPA programs. And you might also ask your mortgage representative and real estate agent for more information. And consider that PMI, or private mortgage insurance for conventional loans, and MIP, or mortgage insurance premiums for loans backed by the Federal Housing Administration, could be required as part of your monthly payment if you put less than 20% down. Step 4. Shopping for a loan and your home buying team. Just like shopping for the best price on a home, you'll want to shop for the best closing cost and interest rate. After you apply, your lender will provide you with a loan estimate. This is a document you can use to easily compare closing costs and rates to help you find the best loan for you. It is recommended to shop with 3 lenders. In addition to a lender, several other professionals will be important through the home buying process, including mortgage representative, real estate agent, inspector, insurance agent, appraiser, and attorney or escrow agent, depending on what state you're in. Step 5. Shopping for a home and inspection. Once your finances are in order and you're ready to shop for a home, identify your needs and wants and make a list of your priorities before you start looking. Think about where you want to live and who and what you want to be close to. This can help you narrow the search and stay on track. When it comes to making an offer, you'll want to work closely with a real estate agent because they are the experts when it comes to negotiation and making an offer. Once your offer has been accepted, it's a good idea to have the property inspected. A home inspector will review your property with a fine-tooth comb and provide you with a report of items that may need to be addressed or repaired. Armed with a home inspection report, you can negotiate for compensation or repair the items identified with the seller. Your real estate agent will also assist with the negotiation. Step 6. Closing and what to expect. Prior to closing, you will receive a closing disclosure, which details your home purchase. The closing disclosure will be provided 3 business days before closing and give you time to review it for accuracy. If you have any questions or if something is wrong or different than what you remember seeing on the loan estimate, make sure you talk with your lender and address any concerns before closing. There's a lot going on behind the scenes when purchasing a home. One example is the title search to identify outstanding claims to the property. So, at closing, you will be required to purchase a lender's title policy, which protects the lender if existing title claims were missed during the title search. You can also elect to purchase an owner title policy. This will protect you from loss and claims to the title of your new home. While many of these items will be handled by your home buying team of professionals, it's important to understand the process and know what to expect so there are no surprises. Step 7. Living in your home. Once you have closed on your home, take time to readjust your budget and start rebuilding or adding to your savings. Homes need repair and upkeep, so having savings is important for your long-term success as a homeowner. If your new home will be your primary residence, contact your county tax assessor shortly after closing to learn about and apply for homeowners or homestead exemption. This program can help to lower your yearly property taxes along with providing several other benefits. You will also want to make sure you are aware of what date your first mortgage payment will be due. You should receive a statement from the company that will be servicing your loan. This is who you will be making your payments to. If for some reason you do not receive a statement by the time your first payment comes due, the payment still needs to be made. Review your closing disclosure to determine where to submit your payment. There are many people to help guide you on your homeownership journey. If you have questions or need assistance along the way, contact a HUD-approved housing counseling agency. We are here to help, so call 866-515-2227 or visit moneymanagement.org to connect with an MMI housing counselor anytime. Resources listed here are organizations and services you may find helpful as you continue your journey to homeownership. If you would like a deeper dive into the home buying process and what is involved, visit us at firsthome.mmiuniversity.org and sign up for the Essentials for Buying a Home course. Thank you so much for joining us today, and we wish you the best of luck on your journey to homeownership.